All right. What's up, tycoons? What's up, traders? Super excited for today's video. Going to give you guys another market summary real quick. Now that, April is officially over and we're in the first week of May, we'll go ahead and review. April was another positive month for stocks with the exception of the small cap Russell 2000 index. The Dow Jones rose 2.6%, the S&P 500 added 1.6%, and the NASDAQ eked out a 0.1% gain. The global equity picture was mixed with developed markets notching 2.9% higher, while emerging markets fell 1.1%. The Russell 2000 slipped 1.8%, making its third consecutive monthly decline. 7 of the 11 U.S. stock sectors were positive in April, and 4 rose 3% or higher, those being consumer staples, communication services, financials, and health care. April was a down month for cyclically sensitive stocks such as technology, materials, consumer discretionary, and industrials. Those all took a breather. Signs pointed to tamer inflation in April as the year-over-year U.S. producer index fell all the way to 2.75%. U.S. inflation broke below 5% as U.S. core inflation hovered around 5.5%. The price of WTI crude oil rose 3.9% to 78.64 per barrel, and Brent shot up 6.4%. This caused the average price of regular gas to increase almost a quarter per gallon to $3.77 at the end of April. Now, U.S. Treasury yields broke 5% once again. The 3-month and 6-month Treasury bills were the two durations to surpass 5% in April at 5.18% and 5.06% respectively. April marked the 3 months highest level for since February of 2007. A 5-year yield of 3.51% was the lowest on the curve. Lastly, the 10-year 3-month Treasury yield spread sunk to negative 1.65%, marking the largest spread inversion in history. So really interesting stuff there. Make sure to smash the like button, subscribe to the channel. If you use inverted yields to yield spreads to forecast recessions, then April was a month worth paying attention to. The 10-year 3-month Treasury yield spread was inverted by as much as 173 basis points in April, making it the largest inversion ever. In March, the 10 2-year spread was flipped upside down by over 100 basis points and remained firmly inverted throughout April. Every recession since 1970 has been preceded by at least one of these yield spreads inverting. Is a U.S. recession lurking around the corner? And we have the 10-year 2-year Treasury yield spread right here. We can see that that's inverted, and the 10-year 3-month, which, a lot of economists pay a lot of attention to this one, including the Fed. We can see this one went extremely low. When it comes to equity performance, we look at the major indexes. All right, we have a chart right here going over them. But, we talked about the Dow Jones. It was up 2.6%, the S&P 1.6%, Russell 1000 1.2%, the NASDAQ was up 0.1%, and we have the emerging markets down negative 1.1%, and the Russell 2000 down negative 1.8%. All right, if we look at the 1-year total returns, we can see the Dow Jones is up 5.6, S&P up 2.7, the Russell 1000 at 1.8, NASDAQ was flat in April, and Russell 2000 was down negative 3.6. Now, this is value versus growth performance, the trailing 12 months. We see IWD, which is the iShares 1000 value ETF. That one was up 1.6% in April. IWF, which is the Russell 1000 Growth ETF, was up 1%. And IWO, which is the Russell 2000 Growth ETF, down 1.2%. And the Russell 2000 Value ETF was down negative 2.5%. All right, when it comes to the sector movement, all right, XLP was leading the way. That's consumer staples up 3.7%. Communications were up 3.3%. XLF financials at 3.2%. Healthcare right behind at 3.1%. We have energy at 2.8%. Utilities at 1.9%. Real estate at 1.0%. And then we have some of the negative ones. Technology was down 0.1%. Materials was down 0.1%. Consumer discretionary was down 1.1%. And the industrials were down 1.2%. And if we look at some of the hot stocks in April of 2023, Chipotle leading the way there, okay, it was up 21%. Then we have Universal Health Services right behind at 18%. We have ISRG, Intuitive Surgical, up 17.9%. Baxter International at 17.6%. Eli Lilly was up 15%. Polte Group, ticker symbol PHM, that was up 15%. Molson Coors, that was up 15%. Meta was up 13%. Medtronic was up 12.8 and Rollins was up 12.6. Those were all of the hot stocks in April. So, you can see if some of those are going to cool off. Maybe some of those gains are going to continue. Those are just some stocks you can keep on your watch list. The laggards and losers, First Republic obviously was on there. We have Catalent down negative 23%. Enphase was down negative 21.9%. Tesla was down 20%. Dish Network down 19%. We have many others in there. Valero Energy down 17.9%. First Solar down 16%. Teradyne down 15%. Again, these are some of the ones you can look to see if any of these are possibly going to have a bounce back. Or if some of that pain is going to continue in those sectors. Now, this is the U.S. Treasury yield. So when it comes to fixed income, the 1-month Treasury rate at the end of April was 4.35%, the 3-month at 5.1%, 6-month at 5.06%, and the 1-year was at 4.8%, 2-year at 4.04%, 3-year at 3.75%, 5-year at 3.51%, and then we have the 10-year at 3.44%, 20-year at 3.8%, and the 30-year at 3.67%. Right now, when it comes to some of the global bond yields, the Italy long-term bond interest rate is 4.32%. The 10-year Treasury rate was at 3.44. Spain's long-term bond interest rate was 3.42. The 10-year Eurozone central bank government bond was at 3.21. We have the Canada 10-year benchmark at 2.84, and Germany long-term bond interest rate at 2.41. And then we have Japan 10-year government bond interest rate at 0.4%. Now, we'll go into some of the economic data. March's unemployment rate retreated back to 3.5%, and the labor force participation rate saw an increase of 0.1 percentage point for the 4th month in a row, bringing it to 62.6%. 236,000 jobs were added in March, which was near non-farm payroll expectations of 239,000 for the month. U.S. inflation cooled further in March to 4.98%, though U.S. core inflation hovered at 5.59%. The last time year-over-year core inflation exceeded year-over-year inflation was January of 2021. The U.S. CPI was flat month over month, as was U.S. personal spending. The FOMC meeting was Thursday, and they went ahead and raised the basis points by 25 points. All right, and so we can see in production and sales, April's U.S. ISM manufacturing PMI came in at 47.1, a rebound of 0.8 points, but still putting the index firmly in contraction territory. U.S. retail and food services sales declined 1% month over month, 2 months removed from its highest monthly increase since March of 2021. The year-over-year U.S. producer price index rapidly cooled to 2.75% in March. In housing, we have U.S. new single-family home sales surged 9.6% in March, though U.S. existing home sales slipped 2.4%. Nonetheless, the median sales price of existing homes rose by 3.3% to $375,700. Mortgage rates stayed about flat through April. 15-year and 30-year mortgage rates ended the month at 5.71% and 6.43% respectively. The price of gold was flat month over month, despite exceeding $2,000 per ounce within April. Gold clocked in at $2,048 midway through April, but ended the month back at $1,979. Oil prices rebounded. We talked about that a little bit earlier. Both types of crude oil are down over 36% from their highs set in March of 2022. Higher oil prices led to the average price of regular gas increasing 24 cents per gallon to $3.77 at the end of April. And the crypto bull run continued in April as the price of Bitcoin rose 4.7% in April, while Ethereum added 5.2%. Year to date, Bitcoin is up 76.4%, and Ethereum is 56.9% higher. Neither has recorded a down month so far in 2023, so we'll see what May has to bring. Appreciate you guys watching the video. Just a quick update on some of the data that and recap of everything that happened in April. Make sure to smash that like button and subscribe to the channel.